Well, we've had a compounded rate of growth over the last 3 or 4 years of 40 to 60%. That'll continue well on beyond 2010 in Sudbury. So it's not driven particularly by high commodity prices, driven by a plan that already is outstanding. It's a very aggressive plan. The company itself is debt-free. We have a considerable amount of capital. We're able to finance and self-finance our growth. So we're in a rather unique position in Sudbury. Well, our growth of ore production is going to double in the next 3 years. But what's very interesting, and we're in a rather unique position, in that the production that we're bringing on now, the incremental production, is going to have margins of anywhere from $500 to $1,000 a ton. So we're going to double production in the next 3 years, but probably quadruple revenue. So the impetus and momentum we have in Sudbury right now is very, very large. We run it at about $6 price of nickel right now. That's what we use, and about $1.50 for copper. Well, of course, in October of last year, we purchased Dynatec Mining Services business. It took our number of employees in Sudbury from 172 at the end of last year, the end of 2006, to over 1,700 at the end of 2007. We now have a pool of very skilled people. We have a pool of equipment. We have all the sorts of things available to us to drive growth that other companies don't have access to. Part of that, and part of the reason we did acquire that group, was the idea to use it to lever into equity positions in other projects that are at or near production. And one of those things we just did recently was to actually buy a large position in SRA Corporation in Tennessee. And really that was not a particularly strategic move, it's really a pure investment move. But in the meantime, we are looking at other larger strategic options going forward. Well, Dynatec Mining Services is Canada's premier mining contracting company. They were founded in 1980. I've done an awful lot of work in Sudbury as well as the rest of the Americas. They come with a lot of skill sets, including shaft sinking, mine development, mine operations, mine permitting, sort of from opening to close of a mine operation. So we have that available to us to drive our growth in Sudbury, but we also have it available to make the operating teams available to companies that have good assets but don't have operating teams right now, and to take an equity position in it, to invest in the company, to invest in the project, and to be the operators of the project. That's really what the key to that is, and of course the key to further growth outside of Sudbury. We have two footwall deposits actually, one at Podolsky, which is coming into production this year, and the second one at the Levack footwall, as you talk about. The Levack one, we were fortunate enough last year to drive into it and develop it. We encountered extremely high-grade material in the 2450 level, material that was running in excess of 20% copper, 1.5% nickel, and a half to an ounce of platinum, palladium, and gold. Very, very high margin ore, and that's the nature of the footwalls. The most exciting development for us going forward is going to be the Levack footwall, which was found behind the historic Levack mine. The historic Levack mine was a huge nickel mine, produced 60 million tons over the years. We're still operating it now to these days. The Levack footwall itself was discovered in 2005, and we're now driving into it. Just early in this year, we've actually driven into it. We've taken out a bulk sample. We've got detailed drilling finished on it. We're also accessing the top of that deposit at the same time from the 2650 level at Levack. In both cases, we're encountering nice high-grade material, massive veins, exactly what we expected, perhaps even exceeding our expectations a little bit. And these two deposits, Podolsky and Levack footwall, are where the high-margin production is going to be coming from, and a high-margin growth over the next couple of years. So those are very important developments to us. Well, in our case, we have a resource base that underpins all of our growth, about 75 million tons altogether. And about half of that, or a little more than half of it, is actually measured and indicated, the highest quality of the resources. We have about 3.5 million tons of reserves in the basin. So from our point of view, that really has two corollaries to it, or two outcomes. Probably longer mine life than people expected, so certainly in excess of 15 years in our case. And probably the throughput that we're looking at and forecasting now is probably quite conservative. We probably will find additional production over the next little while.